Oil is rising, markets are volatile, but Reliance is not moving the way I have expected. Shouldn't this stock be going up? That is exactly the trap because Reliance looks simple, but it's not. Right now, it's being pulled in different directions at the same time. And if you don't understand this, you will completely misread the stock. Stay with me till the end because I'm going to break down Reliance segment by segment and show you exactly why it is behaving like this right now. Once you see this, you won't look at this stock the same way again. Most people think Reliance is an oil company. Now that's the first mistake. Reliance is not one business, it has multiple business running at the same time. You should think of it like this. One part depends on oil, one part depends on India's consumption, one part depends on digital growth, and one part depends on the future. So when you look at the stock, you're not looking at one trend, you're looking at a system. And right now, each part of the system is reacting quite differently. Let's start with the biggest piece, energy. This is where most people focus. So when the oil rises, refining margins can improve and export opportunities can increase. So logically, this should help Reliance. But here is the problem. Oil is not stable right now. It is volatile. And when oil becomes volatile, margins become unpredictable, planning becomes difficult, policy risk increases. So oil is helping, but not in a clean way. And then comes something most people completely ignore. Reliance operates in a sector where policy matters a lot. So when oil prices rise too much, governments step in through taxes, export restriction, pricing control, which means even if the business earns more, the stock doesn't always reflect it fully. This is not a free moving business. It is a policy influenced business. Now, let's move to the part that keeps Reliance stable. Geo is different. It does not depend on oil. It depends on subscribers, data usage, pricing power. So, even when global chaos increases, Geo remains relatively stable. But here is the catch. Stability doesn't create excitement, it just creates balance. Geo doesn't push the stock aggressively, it just prevents it from collapsing. And then there is another engine. Retail depends on India, not global oil, not war. It depends on consumption, demand, and spending. So while global events create volatility, retail keeps growing in the background. This is your domestic growth engine. And then comes the future layer. Reliance is investing heavily in the future. New energy, global project, expansion plans. But here is the reality. This does not impact the stock immediately. It is a long term move. This is not today's trigger, this is tomorrow's story. So now let's connect everything. Right now, energy is volatile, policy is uncertain, geo is stable, retail is growing, and new energy is the future. So what happens? One part pushes up, one part pulls down, one part stabilizes. That's why the stock feels strange because it is not moving in one direction, and this is where most people go wrong. Most people look at one signal. Oil is up, stock should go up. But Reliance doesn't work like that. It is not a single variable stock. If you simplify it, you will misread it. Reliance is not weak, but it is not simple either. It is a mixture of global exposure, domestic growth, policy influence, and future bets. And when all of these interact, you don't get a clean trend, you get complexity. If you understand Reliance like this, you will stop reacting to headlines and start understanding the business clearly.